Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Friday, the 26th of November. Rather Black Friday as well, literally in terms of the shopping and other matters in the stock market, COVID, etc. Just thought I'd look at the FTSE 100 and just see where we are in terms of the progression here. And we've had this rising trend channel since, I suppose, this time last year. What's interesting to note here is that it's a rising channel. The floor of the channel really at the 200-day moving average, that was around, or is around 70.30. The low today around 70.50. So in fact, we've had a rebound so far above the 200-day line, which actually can be taken as a positive if you want to take something positive out of this. The trend channel, the support line there just below that 200-day line around 7,000, which is an obvious place psychologically, etc., for support. What's interesting here, though, today is that the dip we've had mirrors the dip we had in September when actually the market went below the 200-day line and then bounced off it. Rising 200-day line, normally you'd be backing the market to rebound, and let's see if that happens to be the case today, especially while there's no end-of-day close back below the 200-day moving average. But to get out of trouble, though, I suppose the ideal scenario is that there's an end-of-day close back above the 50-day moving average at 71.90. So if you're cautious of the market and think that we are heading much lower, maybe that would be the trigger to change your mind on that. And so an end-of-day close back above that level and that feature, the way to go. On to the stocks, and COVID plays really dominating today. We had a COVID announcement from Braveheart. Here we've got this trendline break that we've had since April. That was earlier this month. We've had support at the 50-day moving average at 33.5, and above that we were looking for, and are still looking for, the 200-day moving average at 47. The high today 44.5. So the stock so far playing ball. A best case scenario here up to that August resistance line projection at 70 pence, but at the moment that seems to be rather a long way away. You can tell how COVID friendly today is when even Gene Drive is on the front foot. Here, interestingly enough, we've broken that line of resistance from May. That was around the 17 pence level, and we're well through that. A weekly close above the 50-day moving average at 21. Could open the door for maybe a follow-on move to the upper 20s, 25, 26 pence, which was resistance on the way down back in September. We've also got some bullish divergence for November in terms of the lower lows for November, but a higher RSI traced, albeit from a very oversold level. So that it does suggest that, or imply, there could be a turnaround here for Gene Drive after months of disappointment. Stock which I covered earlier in the week and got lucky with. I suppose the initial COVID stock rebound was off the back of European COVID news, but the African variant, alleged African variant, giving things a second wind. We had a break of that resistance line there at 2.5, and above that, looking for the shares to fill the gap up to around 3.6 pence, even if they fall back again after that. So My Health Check looking rather better than it has for quite a while. Novasit also covered recently, breaking the initial target we had here around 320 and gapping up through the 200-day moving average at 409. A best case scenario target here now up to £5 maybe by the end of next month, while we have no end of day, while we have an end of day close or closes above the 50-day moving average, above around the 410 area, looking for £5 for Novasit. Another stock in recovery mode is remote monitored, it used to be in remote monitored systems, is now called Nanosynth. This is also breaking an extended resistance line there. That was around 0.6 pence. And interesting, the shares, I'm sort of looking for the shares to test the 0.5 level. They've managed to avoid that and bounced up above that, so that is quite impressive. Initial target here was 0.7, the 50-day moving average. Next level up to the initial October peak at 0.93. So let's see if Nanosynth can do that over the next month or so. Bullish, or at least in recovery mode, while we're above 0.6 there for that stock. Scancell is next, and here we can see that the shares look like they might, this might be the time for the big breakout. We've had a key reversal to the upside. Want to see an end of day close above 22 pence, which would break that line of resistance from February and the 200-day moving average. If we can do that on a consistent basis, then the breakout could be as high as 32 or 33 pence over the following 1 to 2 months. Upside valid while we hold above the 19 pence area at this point. Moving on to Sareum, which had quite an interesting decline over the beginning of the week. What was interesting here is that the shares dive below a rising 200-day line. Normally that is a dip to buy into rather than a failure, as I'm hoping with the FTSE 100, for instance. In this case, though, we want to see an end-of-day close above the August resistance line at 6 pence. If we can get that, then we're looking towards the October peak at 7.5 pence, which seems to be a reasonably conservative initial target for the stock over the next month or so. Moving along to just a couple of stocks to go now, Synergen, and here we've got a decent rebound. The situation here is that while there's no end-of-day close back below the 50-day moving average at £1.69, we're looking for a retest at least of the £2 area. The overall pattern here, I suppose, is of an improving situation. We had that gap higher last month. Rising trend channel at the moment, sort of mini channel that one can point towards the £2.60 area, maybe over the next 1 to 2 months while we hold above that 50-day moving average. But nice support area for the shares around there. Finishing off with a non-COVID stock, although I suppose people if they're in lockdown, people game more, gamble more. Here we've got Webis breaking that line of resistance and also now breaking the peak of last month at around 4.9 pence. Above that, looking towards as high as 6 pence, which was April resistance, maybe by the end of next month. That's it from me today. More updates over the weekend.